Hey YouTube, this morning I'm going to talk to you real briefly about real estate prices and whether I think they're going to go down, how they have been affected by interest rates, and whether you should invest in that right now or what that market looks like. And so I want to get right into this to give you some information. Two areas that I generally understand from my housing prices. One is in Rogers, Northwest Arkansas, certain neighborhoods, and one of the houses is here. And then the other one we'll look at is in Missouri, around the Kansas City area. And we're just picking out a random house to look at how the price has been affected by interest rates, market volatility, and those type of things. So this first house is in Arkansas, in kind of a more up-and-coming area where there's good employment and those type of things. And as you can see, the price was slowly climbing up to about, we'll say, April, March of 2020, which is when the federal government started issuing a lot more dollars. You've seen some inflation charts, which is the issuing of currency, that they issued maybe, let's say, 60% more. And so a house is two things. A house is both an asset and it is also a commodity. An asset is something like a stock or real estate or crypto. Some cryptos are assets. And then a commodity is something like the loaf of bread, restaurant food, things like that, right? So prices of commodities have been coming up slowly at a rate of, it says 8.5%. Is what they're tracking, more like maybe 10 or so. But the price of assets directly reflects the value of the dollar that it's measured in. And so you see this price maybe at $159, they print 60% more money, and boom, it's up here to $250. Okay, so this increase reflects the house being measured in dollars, which are now worth less. Okay, that's why it has jumped like this. Now, this area is also a growth high demand area, so this is more, just a little bit more than another area we'll look at, which is not so much growth. But I want you to see a couple things in here, because as we talked about in other videos, prices don't always reflect all information. So if you look at the prices in here, you can see that the interest rates changes are not in these prices, right? There's no bump when they put interest rates up in here, no changes there, so that hasn't been reflected in the prices. And then there's no stock market adjustments and things like that in these prices. Now let's look at the other one. This was in lower demand area. So in a lower demand area, you've got right here, similar point, but you've got a little bit of a curve, and then it bumps up 100,000, which is similar to the amount that it jumped down in value for the dollar. And so the real estate is still following the asset curve. I don't see any adjustment for availability of money yet. I don't see any adjustment for interest rates. And so basically, those things are not built into the price yet. Now, the question about whether it will crash or not is really complicated when you get to rental prices, when you get to individual houses, because people might have between a 3 and let's say 20%, but usually 3 and 10% down payment, which means if they buy a house today at $260, they can't sell that house without the bank taking a loss, which takes approvals and things, at less than losing their down payment. And so generally you won't see much of a correction beyond that in the prices of the houses. And so I wouldn't really look for that to occur in these houses. Now, The other thing about houses is, in order to buy and sell a house, it costs 5% of the cost, just in realtors fees, and then you have other costs, just the time value of the money, how long it takes you to do it, things being off the market. So let's say total maybe 8% of the cost to sell it. So buying and selling on an expected 10% adjustment nets you so little that it's really not worth it. So from a rental and individual house standpoint, I would say that there's not going to be a lot of things happening. Now, I would say this certainly levels off very quickly here. Prices cannot climb faster. It'll level off to a reasonable amount that people are willing to buy it with that additional risk. And so now the same thing is not true when you get to the commercial side. Commercial loans, interest rates are higher. And so one of the things I will mention is that this market is very much determined by the prices individual people can pay for this asset. And so it is not generally determined by commercial prices that people doing real estate can pay. And so because of that, I would expect that at some point you would see some type of indication here that the price of money is higher once inflation has been fully priced into this. So if you look down here, maybe 2020, you've got maybe a 30% adjustment in this house. And so I would say the full adjustment for inflation hasn't been made yet in this area. And this other area we looked at, part of this is probably a demand increase on the houses. So I just wanted to give you a breakdown on this. As far as how to make money on this, number one, would I be buying rental houses or individual houses? Well, if you're going to live in them for the next 5-10 years, it's the house you live in, and you don't care about the value fluctuations. And so, gradually it'll catch up with this small increase in price. I don't think they're going to come down. So if you wait a year, you're probably going to end up paying a little bit more than you are now. And even if they do come down, it maybe comes down a 5 or 10% adjustment and then goes back on the track to come up. And so from that standpoint, you're buying an individual house. I don't see a big advantage in waiting much. Maybe go out and don't bid higher than the asking price. But the asking prices are pretty reasonable now if you can find a house that you can buy at the asking price. And so it may take more offers on the houses or things like that to get to that. So that's just my piece, and that's what I'm doing now. Sometimes I get a private equity, a private market deal, and I've bought one of those lately. I had an option to buy one last week, but I didn't take it because what I'm waiting for is, saving some cash and waiting for a little bit less demand in the market to put some pressure on maybe some people that have to, companies or whatever that have to sell fast, and there being an opportunity in that particular place to buy at a discount to what the market has. Maybe even 5-10% would be, $25,000 off. And that would be enough for me to get into that at an advantage with the reduced risk and maybe make some money. Hope this helps you out. Like and subscribe down below if you want more videos, and I'll talk to you later.